Every year, thousands of homeowners in California get hit with penalties of 10% or more just for missing one simple deadline. And here's the shocking part. Many of them had the money ready. They just didn't know when or what to pay. What if the real danger isn't the tax itself, but the hidden rules around it? One missed payment can quietly turn into growing fees, legal notices, and even the risk of losing your property without you realizing how fast it's happening. In this video, we'll uncover 10 costly mistakes and hidden tax traps that California homeowners must avoid before April, so you don't end up paying far more than you should. Number 1. Late property tax penalties. In California, property taxes may seem straightforward, but missing the April deadline can instantly trigger a costly consequence. The moment your payment is late, a 10% penalty is added automatically. No warning, no grace period, just an immediate financial hit that can turn a manageable bill into something much heavier. What makes this even more frustrating is how common it is. Many homeowners assume they have extra time, confuse the due dates, or rely on memory instead of checking official notices. Others believe their mortgage company is handling the payment through escrow, only to find out too late that it wasn't covered. By the time they realize, the penalty has already been applied. And it doesn't stop there. Once that initial penalty hits, additional interest charges can start building if the balance isn't cleared quickly. What started as a simple oversight can quietly grow into a much larger financial burden. The solution is simple, but it requires awareness. Set at least 2 reminders before the deadline, one a month prior and another a week before. Even better, log into your county tax portal early and confirm the exact amount due. Don't rely on assumptions, because in this case, it's not the tax that hurts the most, it's the timing mistake that costs you extra. Number 2. Interest charges that quietly keep growing. Missing the deadline doesn't just cost you a one-time penalty. It opens the door to something even more dangerous: ongoing interest charges. In California, once your property tax becomes delinquent, the balance doesn't just sit there. It keeps growing month after month. At first, it may not seem like a big deal. A small percentage here, a little extra there. But over time, those charges start to stack up. What was once a manageable bill can slowly turn into a serious financial burden, especially if it goes unpaid for several months. This is how many homeowners fall into a cycle. They delay payment thinking they'll handle it later, only to find the total has increased more than expected. What makes this tricky is how quiet it is. There's no loud warning, no sudden alert. The amount just keeps increasing in the background, making it harder to catch up the longer you wait. So what can you do? If you've already missed the deadline, don't panic, but don't delay either. Even making a partial payment can reduce how much interest builds over time. The sooner you act, the less damage it causes. Also, regularly check your tax balance online. Knowing your exact amount gives you control, instead of letting the numbers grow unnoticed. Because when it comes to property taxes, waiting doesn't save you money, it costs you more. Be honest. Have you ever delayed a payment thinking it wouldn't matter much? What happened next? And if you value content that actually helps you avoid costly mistakes, subscribe. It's just one click, but it means a lot to us. Number 3. When the government claims your property. One of the most serious consequences of unpaid property taxes in California is something many homeowners don't fully understand: a tax lien. This isn't just a late fee or a warning notice. It's a legal claim placed on your property by the government, essentially saying, this debt must be paid before you truly own or sell this home. At first, everything may look normal. You're still living in your house. Nothing physically changes. But behind the scenes, the situation becomes much more complicated. A tax lien can affect your credit profile, limit your ability to refinance, and create serious issues if you try to sell your property. Buyers and lenders will see that lien, and most won't move forward until it's cleared. What makes this dangerous is how quietly it happens. Many homeowners don't realize they've reached this stage until they receive official documents or face complications in financial transactions. By then, the situation is already more difficult to fix. So what should you do? If you've missed payments and suspect you're at risk, don't ignore it. Contact your local tax office immediately and ask about your options. In many cases, payment plans or solutions are available, but only if you act early. Because once a lien is placed, it's no longer just about taxes. It's about ownership, control, and financial freedom. Number 4, risk of property auction. This is where things become truly serious. If property taxes remain unpaid for too long in California, the situation can escalate beyond penalties and liens. Your home could eventually be placed in a tax-defaulted property auction. Yes, that means the government can legally sell your property to recover the unpaid taxes. It doesn't happen overnight, which is why many people ignore early warnings. There's a process: missed payments, added penalties, a lien, and then years of delinquency. But that timeline can create a false sense of security. Homeowners think, "I still have time," or "I'll deal with it later." Meanwhile, the situation keeps progressing quietly in the background. By the time the property reaches the auction stage, options become extremely limited. At that point, the goal is no longer to help you catch up, it's to recover the owed amount. And often, homes are sold for far less than their market value, meaning you could lose a significant asset over what started as a manageable debt. The key is to act early, long before it ever reaches this stage. Pay attention to every notice, every letter, and every update from your local tax office. If you're struggling, reach out and ask about payment plans or assistance programs. Because the biggest mistake isn't missing one payment, it's waiting too long to fix it. Did you know unpaid taxes could actually lead to losing your home? Share your reaction below. And if you appreciate the effort we put into simplifying complex topics, subscribe. It's just one click, but it truly keeps us going. Number 5, escrow confusion. One of the most common and expensive mistakes homeowners make in California is assuming their mortgage escrow account is automatically handling their property taxes. In many cases, it does, but not always. And that small misunderstanding can lead to missed payments, penalties, and unnecessary stress. Here's how it happens. When you first buy a home, your lender may set up an escrow account to collect money monthly and pay your property taxes on your behalf. Over time, however, things can change. You might refinance, pay off your mortgage, or your lender may adjust the escrow terms. Suddenly, the responsibility shifts back to you, but you're never fully aware of it. So you go about your year thinking everything is covered until a late notice arrives. By then, the deadline has passed, and penalties may already be applied. It's not carelessness, it's a lack of clarity. The solution is simple but often overlooked. Verify your escrow status at least once a year. Log into your mortgage account or contact your lender and ask directly, "Are my property taxes being paid through escrow?" Don't assume, confirm. Also, keep track of official tax notices from your county. Even if escrow is active, reviewing those documents helps you stay informed and avoid surprises. Because in this situation, the biggest risk isn't the tax itself. It's the assumption that someone else is handling it. Number 6, supplemental tax bills. Just when you think you've paid everything, another bill shows up. In California, many homeowners are caught off guard by something called a supplemental tax bill. This usually happens after you buy, refinance, or significantly improve your property. The value of your home is reassessed, and you're billed for the difference. The confusing part? This bill doesn't always arrive immediately. It can show up months later, long after you've settled into your home or finalized your finances. By then, most people aren't prepared for another payment, especially one they didn't expect. And because it feels like a mistake, many ignore it or delay paying it, assuming it's optional or already included in their regular taxes. But it's not. This is a separate, legally required payment, and missing it can lead to the same penalties and issues as regular property taxes. So how do you stay ahead of this? If you've recently bought or refinanced a property, always set aside a financial buffer for potential supplemental taxes. Even if the bill hasn't arrived yet, preparing in advance prevents stress later. Also, carefully read every tax-related document you receive. These notices often explain exactly what the charge is for, but only if you take the time to review them. Because sometimes the most expensive mistakes aren't the ones you see coming. They're the ones that arrive unexpectedly. Have you, or someone you know, ever been surprised by an unexpected bill like this? Share your story below. And if you appreciate the effort behind breaking this down clearly, subscribe. It's just one click, but it keeps this content going. Number 7. Mello-Roos and special assessments. Many homeowners in California think their property tax bill is just one number, but in reality, it can include additional charges that quietly increase what you owe. One of the most overlooked is Mello-Roos and other special assessments. These are extra taxes used to fund local infrastructure like schools, roads, and emergency services, especially in newer communities. The problem? Many buyers either don't fully understand these charges at the time of purchase or forget about them later. These fees are often bundled into your property tax bill, making it harder to notice how much extra you're actually paying. And unlike regular taxes, some of these assessments can remain in place for years or even decades. What makes this risky is that people budget based on their base property tax, not realizing their total obligation is higher. Then when the bill arrives, it feels unexpectedly large. In some cases, homeowners assume it's an error, or worse, they delay payment, leading to penalties. So how do you protect yourself? Always review the full breakdown of your property tax statement, not just the total. Look for line items related to local bonds, districts, or Mello-Roos charges. If you're buying a home, ask directly whether these assessments apply and how long they will last. Because when you don't understand what you're paying for, it becomes much easier to underestimate the true cost of ownership. Number 8. Missed exemptions. Here's something surprising. Many homeowners in California are actually paying more tax than they need to, simply because they never applied for available exemptions. These are legal ways to reduce your taxable property value, yet thousands of people either don't know about them or forget to claim them. One of the most common is the homeowner's exemption, which can lower the assessed value of your primary residence. It may not sound huge at first, but over the years, those savings add up. There are also other exemptions for seniors, veterans, and individuals with disabilities, each designed to reduce financial pressure. The problem is, these benefits are not always automatic. In many cases, you have to apply manually, and if you miss the deadline, you miss the savings for that year. What makes it worse is that most people only realize this after they've already paid more than necessary. So what should you do? Take a few minutes to check your eligibility. Visit your county assessor's website and look for available exemptions. If you qualify, submit the application as early as possible and mark your calendar so you don't forget in the future. Also, review your property tax bill carefully. If you don't see any exemptions listed and you believe you qualify, that's your sign to act. Because sometimes saving money isn't about earning more, it's about not overpaying in the first place. Quick question. Have you ever checked if you qualify for any property tax exemptions? Tell us below. And if this kind of information helps you keep more of your money, subscribe. It's just one click, but it truly supports our work. Number 9. Incorrect property assessments. Here's something most homeowners never question: the value placed on their home by the tax authority. In California, your property taxes are based on your home's assessed value. But what if that number is wrong? Many homeowners are unknowingly paying higher taxes simply because their property has been overvalued. This can happen for several reasons. Market values fluctuate, property details may be outdated, or automated assessments may not reflect the true condition of your home. For example, if similar homes in your area have decreased in value but your assessment hasn't been updated, you could be paying more than necessary year after year. The problem is, most people assume the number is correct and never check it. But even small inaccuracies can lead to hundreds or thousands of dollars in extra taxes over time. The good news? You have the right to challenge it. Start by reviewing your property assessment notice carefully. Compare your home's value with recent sales of similar properties in your area. If something doesn't add up, you can file an assessment appeal with your county. It may take a bit of effort, but the potential savings make it worth it. Even a small reduction in assessed value can lower your tax bill significantly. Number 10. Ignoring tax notices. It might seem harmless, another letter in the mail, another official document you'll check later. But in California, ignoring property tax notices is one of the most common reasons small issues turn into serious financial problems. These notices aren't just reminders. They often contain critical information about deadlines, balances, penalties, or changes to your tax status. The danger is how easy it is to overlook them. Busy schedules, confusing language, or simply assuming it's not urgent can lead people to set these letters aside. But while you delay, the system keeps moving forward. Deadlines pass, penalties are applied, and in some cases, legal actions begin, all without you fully realizing what's happening. What makes this worse is that many of these notices clearly explain what needs to be done, but only if you take the time to read them. Missing one key detail can cost you hundreds or even put your property at risk over time. So what's the solution? Make it a rule. Never ignore official mail related to your property. Open it the same day, read it carefully, and take action if needed. If something doesn't make sense, don't guess. Contact your local tax office and ask for clarification. Because in most cases, the problem isn't the notice itself. It's not paying attention to it in time. Be honest. How often do you delay opening important letters? Drop a guilty or always on time in the comments. And if this reminder helped you rethink your habits, subscribe. It's just one click, but it truly supports the effort behind these videos. When you look at all these points together, one thing becomes clear. Most homeowners don't lose money because of the tax itself, but because of the mistakes surrounding it. Missed deadlines, hidden charges, ignored notices, and simple misunderstandings can quietly turn a normal obligation into a serious financial burden. The truth is, the system doesn't always warn you loudly. It moves forward whether you're paying attention or not. And that's why so many people get caught off guard. Not because they're careless, but because they're unaware. A small delay here, a missed detail there, and suddenly the cost becomes much higher than expected. But here's the good news. You now know what most people don't. Awareness gives you an advantage. By staying organized, checking your tax details regularly, and acting early, you can avoid penalties, reduce stress, and stay fully in control of your property. Take a moment right now and ask yourself, am I 100% sure everything is handled correctly? If the answer is no, that's your sign to double-check before it's too late. Because in the end, protecting your home isn't just about paying taxes. It's about understanding the system and making sure nothing slips through the cracks.